Welcome to Paladin Financial Talk. I'm your host, Jeff Quick, and I'm joined today by Mr. Tony Shore.
Yes. Thanks, Jeff. Great to be here with you today, buddy.
Always.
Yeah, it's going to be a fun one. You and I always have a fun show when we do it together. It's always a
100%,
blast.
Tony.
Always a blast. Always fun. Now, Jeff, you've got a great topic lined up for us today. What are we talking about?
We're going to talk about retirement income planning and the distribution process, Tony.
Okay. So the distribution process, what do you mean? When I think of distribution, I think of a big warehouse and like Amazon, but you're talking about money, right?
Correct. So you could look at it that way. You have different types of money that you've worked your entire life to accumulate.
Sure.
Now it's time to start turning that into income for retirement.
Excellent. Well, that makes sense. So when it comes to retirement income planning and the distribution phase of your life, so before that, we've been accumulating.
Correct.
Yeah.
And I think Ellie was on last week. And
Ellie
you guys touched on
about
that.
Yep. And she did a great job, but you're a pro. I mean, this is going to be a great show. We're not going to compare
If you say
the two.
so.
We're not going to compare the two. The entire Paladin team does a good job on the show, and I'm lucky because I get to do shows with all of you.
Yeah.
Yeah, I like how you swap it out. So I've been doing good, by the way. I really enjoyed our weather. Last weekend was so fantastic, but of course now it's cold, windy, and rainy again.
Yeah, it's cold, windy, rainy today. I think that's going to continue on for the next 3, 4, 5 days.
Yeah, that's what they say. But I think spring is here.
It's here.
Hopefully
Spring has
the snow is gone. Winter's gone, right?
Yeah. April showers bring what?
Mayflowers.
But what do Mayflowers bring?
I don't know.
Pilgrims.
Or your furniture.
Sure.
Mayflower moving and storage. All right. So let's dive into this. Retirement income planning is daunting because I think people spend their whole lives in the accumulation phase. They have no idea how to take a lump sum or a 401k or an IRA and turn it into a monthly retirement a monthly income that they know will last.
Yep, 100%. So, I mean, really, Tony, it's all about just ensuring that the individuals have enough income to sustain their desired lifestyle through the retirement years. I mean, it involves a number of things: careful planning, taking a look at your income sources. We have pensions, right? We have Social Security, different investment assets, and creating a strategy to maximize and effectively distribute those assets is really key. And also doing that in a tax-efficient manner where things get a little more complicated.
Sure. That makes sense. And it does sound like a complex process, though. So what are some common challenges that people face when it comes to planning for their retirement income?
Yeah, good question. One of the biggest challenges is just the transition, changing your mindset from that accumulation phase to the distribution of those retirement assets. I like to say, you've worked your whole life accumulating these assets. You've been out there, you're working for money right now, right, Tony?
Right.
And now when you go and retire,
you better be paying me, Jeff. That's all I can say.
Now you really want that money needs to start working for you now to
Sure.
help you get through those retirement years. Make sure you've got enough there to preserve your lifestyle, and also have some set aside for unforeseen financial issues that may arise. And also look at the future and how you're going to pass that down to your beneficiaries, hopefully, if there's some left.
Yeah. So how can people out there effectively turn their retirement and investment assets into retirement income?
Yeah, it really starts with creating a well thought out retirement income plan. I mean, everybody's unique, so you want to tailor this to your specific financial goals. It needs to take into account factors such as income needs, wants, wishes, look at life expectancy, inflation. We have healthcare costs, right? Risk tolerance. All of these things come into play. You also want to make sure you have diversification. Spread those assets across different investment vehicles, mitigate risk, and ensure a steady stream of income throughout retirement.
Yeah. Well, and I know a big part of retirement income for so many people, the foundation, as you always say on the show, the foundation of retirement income is Social Security, because pretty much all Americans out there are going to receive some type level of Social Security. Not all, but most. So How does that work? When should people file for Social Security?
Yeah, really, really good question, Tony. And we'll give you the basic answer, but I did look up this morning just a couple of stats from Vanguard.
Sure, yeah.
And one of them says, so Social Security
Yeah.
provides 90% or more of income for 35% of retirees, right? So that's a huge number. Between 50 and 90% of income for an additional 29%. So we're talking over half of the individuals rely quite substantially on that Social Security income. So it's a big deal. But in general, yes, when they should file, for most people, you want to delay as long as possible. That's going to give you the biggest paycheck, but it can become more complicated if you have a spouse, right? Now you have a lot more options on how and when to file.
Spousal filing strategies.
Yep.
Or if you have health issues, you might want to take it early.
Correct.
Yeah.
If there's a large difference in your primary insurance amount versus your spouse's, right? One may get $4,000 a month from Social Security. The other one gets $1,500. That makes a difference in how you should file, as well as if there's a large income, or not income gap, an age gap in there.
Sure.
That also impacts how and when you should file for Social Security.
Wow. Yeah, so there's a lot more to Social Security than just, hey, when I turn 62 or 65, I'll file.
Yeah.
You really should work with a financial professional like yourself. I know you have a report you run for people, the Social Security Maximization Report, to show them exactly when the best time based on their personal situation is to file.
Correct.
So if our listeners want that, at the end of the show, we'll give out the number and the information so they can contact you and set up that consultation. What about pensions? We've talked about Social Security. Pensions are income for some people. I know I like to say pensions have gone the way of the pension, Jeff. Because instead of buffalo, they've brought the buffalo back, right?
Right.
I mean, buffalo are pretty common now, or bison, I should say. They're really bison here in the U.S. But the bison, you can't say that anymore. So I think we should say it's gone the way of the pension, because only government workers, only the people I know work for the government get actual pensions.
Yeah, a lot of government employees do have them. Also, maybe if somebody's been employed at the same employer for quite a bit of time, they probably have a pension that no longer they're adding to, but they have it from
some local
past
companies
years.
like Anderson Windows. I
Sure.
know for years they've had profit sharing and pensions, and they've basically, I think, done away with most of the pensions, but now they have a 401k plan, but some of the older workers might still have a pension from a company like that, or I know 3M used to have great pensions, but
Correct.
these private individual companies like that really have gotten away from the pension.
Yeah, for the most part, you don't see them very often anymore. If you're fortunate enough to have a pension plan, a couple things to look for. One, do you have a lump sum distribution option? Sometimes you're locked in and you have to take a pension payout over a certain period of time. Others will allow you to lump sum that benefit out. The reason I point that out is sometimes you can create your own pension through various financial products, maybe an annuity or something like that.
Sure.
That may have a higher payout than your pension plan.
Sure.
Especially with where interest rates are at today. Higher interest rates mean higher returns on fixed income products, which can result in a higher payout. So number one, see if you have a lump sum option. It may be a potential. Number two, do you want to take that pension payout over your single life expectancy, or do you want some type of spousal benefit as well, either 25%, 50, 75, or 100% spousal continuation, which will reduce your individual pension amount, but is there in case something happens to you prematurely, and at least continue that payment to your spouse or potentially the person of your choice. So that's another thing to look at. One other option people don't always look at, so you could take, let's say you could take an individual pension over your life that would pay you $2,000 a month.
Yeah.
Or you could add your spouse in there as a 50% continuation, which will reduce your payment. Sometimes, and I actually did this for my dad. He had a single life pension payout, and the spousal benefit reduced it by so much. What we did for him, took the single life payout, which was a higher dollar amount, offset the disappearance potentially of that pension with a life insurance policy that would then continue that on for my mother if something did happen to him prematurely and he didn't get all the money out of that.
Sure.
So there are other options. Definitely consult with somebody that understands pensions and income planning to help you out.
Well, yeah, and I think that makes sense. I know that there's more to just getting a pension then. There's a lot of things to take into consideration, especially the spousal strategies. So what role do taxes play in retirement income planning as you're planning out, helping people plan their income for retirement and what they'll need? And where they're going to get it. Do taxes play a role in this plan?
Taxes are a huge part of it, and I will say not all financial advisors look into it as closely as I would recommend they do, and as we do at Paladin.
Sure.
But first thing, Tony, and we've talked about this before. I know from the past. What's the largest expense you're going to face during retirement?
Probably taxes.
Well, healthcare, right?
Healthcare and taxes
got
are
ahead
the
of
two
me.
biggest.
Yep.
Yeah,
Taxes are typically going to be second, right? So it's a huge number.
1 and 2, either way. I know
Either way.
It depends on the person, but you typically healthcare, especially if there's long-term care, but even just regular healthcare.
Yeah, it's expensive.
Yeah.
So, I mean, it's significant. You want to consider tax-efficient strategies when you start to withdraw money from retirement accounts and investment portfolios. There's different types of accounts, right? We have tax-deferred accounts like IRAs and 401ks. Could be Roth IRAs that are tax-free, right? Implementing strategies to help minimize the taxes you pay throughout retirement is key to a successful retirement, as well as getting the most out of all the hard work and saving you've done over all these years.
Right. So basically, if you can, in your plan to minimize that tax burden, for every dollar you don't pay in taxes, that's a dollar you have for retirement.
Correct.
Right?
Yep.
I mean, that is part of retirement income plan.
Yeah, it's really crucial, Tony. And as I mentioned, there's 3 main categories of retirement assets. You've got your taxable, right? Those are your checking, savings account. Maybe you have a non-qualified brokerage account that are taxed at shorter long-term capital gains rates upon withdrawal.
Sure.
You've got your tax-deferred accounts, right? Most of your retirement vehicles today, 401ks, 403bs, traditional IRAs. And then we have tax-free assets as well, Roth IRAs, and potentially some cash value life insurance policies where you can get money out income tax free as well. So important to withdraw the assets to minimize taxes, but also, Tony, it's important to invest those monies differently as well.
What do you mean by invest them differently?
Well, example being, and this is very general in nature, but for most people when you retire, the first place you're going to take withdrawals from should be your qualified assets or your taxable assets, right? Typically, the last place you're going to take them from is going to be your Roth IRA. So let's say you're investing for the long term. It typically makes sense to have your more conservative investments within the traditional or the tax-deferred assets because we want to make sure it's there for us.
Sure.
And knowing the longer we have, the more predictable the markets become and the better our chances for gains. Your Roth IRA should typically be invested more aggressively because we're going to wait a longer period of time to withdraw.
It's typically
that.
a more long-term investment. I know with a Roth IRA, you have to have it in there for at least 5 years before it becomes tax-free. So
yes,
right,
yes, the growth, correct.
So that's that's money in that bucket, that tax-free bucket that you don't need right away.
Right.
You want that for later in retirement or.
Yep.
To pass
and
along.
remember the non-qualified assets as well. Tony, did you know if you're married filing jointly, you can withdraw from a non-qualified account up to $94,050 at 0% income tax.
Wow.
So all those things need to be taken into consideration.
Yeah.
And if you have all of those different options.
That's something that's not talked about a lot, but you have to, that's why it illustrates why you need to work with a trusted financial professional who, like the Paladin team and yourself, Jeff Quick, who knows what they're doing. So they say, well, you have this option or you can do this in this situation.
Yep.
And it's invaluable. I mean, because otherwise you can make costly mistakes, especially when it comes to this planning. And so are there any other key components to a comprehensive retirement income plan that our listeners out there should be aware of?
Yeah, really the last one, and I think we'll go into this on a future show as well, is estate planning is a critical
It's
aspect.
a biggie. Yeah, that's probably a series of shows just on its own, isn't it?
Yeah, could be, right? It's another way we want to minimize not only your income taxes, but estate taxes and the taxes that will eventually be paid by your beneficiary. Could involve setting up trusts, establishing powers of attorney, evaluating your designated beneficiaries.
Sure.
And one of the big things too, I try to work with them on if there's going to be money left in your plan. Let's take a couple let's say they have a large IRA and they have a large Roth IRA as well. They have 2 children. One of them is a high earner. They're in the 37% tax bracket. Other child in a 22% tax bracket. If you were to pass on that traditional IRA to your higher earning beneficiary, they're going to pay 37% federal income taxes on that, right? And they're going to pay 9% Minnesota state tax, right? We're in Minnesota. You're looking at almost half of all of your hard work going to Uncle Sam because that one beneficiary
and
is
he's
a
not
high
even
earner.
your real uncle.
Not even. So a lot of times, Tony, people have 2 children. They want to split it 50-50. Well, in this case, I may suggest, hey, why don't we give a little bit more of the traditional IRA to the lower earning beneficiary so we can keep that tax rate down maybe in 22%, so all your hard work doesn't disappear to Uncle Sam, and maybe give a larger portion of the Roth IRA to the higher earning beneficiary so we can minimize the taxes that we're paying throughout not only your retirement, but also for your beneficiaries down the road as well.
Yeah. See, that makes great sense, and that illustrates a huge point. There are so many costly mistakes that can be made when it comes to retirement planning and your investments, your overall financial plan. So we're wrapping up here. Is there anything else you want to add for our listeners before we go today, Jeff?
I just encourage everyone to start planning for retirement as early as possible. Make sure you're working with an advisor that can navigate these complex retirement income situations as well as help you with some tax strategies, to maximize, again, just all your hard work. That's really all we're trying to do. You've worked hard your entire life. Let's get the most out of it for you. At Paladin, this happens to be our area of expertise.
Yeah.
I would say, Tony, 90% of our clients are between 55 and retired. It's just an area we chose to specialize in. We do it extremely well. We do it every day. I always like to say, Tony, you might not retire every day, but we do, right?
Yeah, my wife and I are only going to retire once. You go through this retirement planning process every day, and you're going through it with all your clients. So that's why, you're considered a specialist in this field, and there are so many costly mistakes that our listeners can avoid if they just pick up the phone, and it's very helpful.
Yeah.
So give that phone number and web address.
You bet, Tony. You can reach us at 651-842-8406, and also find us on the internet at www.paladinfinancial.com. Love to speak with you.
All right, paladinfinancial.com. It's easy to remember, paladinfinancial.com. That's PALADIN financial.com.
Wow, that was amazing.
Yeah, well, I wanted to spell it out. Yeah, it's like a spelling bee here, but just in case. Didn't want somebody to put an EN in there or something. So great show today, listeners. Thanks for tuning in. That does it for today's episode of Paladin Financial Talk with our host today, the man, the myth, the legend, Jeff Quick.